Hey everyone, it's Mike from Orderflows. I hope you guys are doing well. And it's sort of been a while since I've done these daily analysis videos. And today I want to talk about the market because yesterday in one of my training sessions, a question came up about what would you use in terms of order flow on when a number comes out like non-farm payrolls. Today was CPI, and to be honest, when big important numbers come out, I don't trade those numbers. I mean, I don't think that you should really be getting involved if you're a scalper, a short-term intraday trader. You're picking basically the most volatile time of the day to trade, and it doesn't really behoove you to participate, in that volatility in those moves. I mean, if you're right, yeah, you could, hit it out of the park, have a great trading day. But if you're wrong, you're going to get stopped out really quick, and it's just going to give you some bad vibes for the rest of the trading day. So honestly, on non-farm payroll days, I don't even. I've learned to stay away from the markets on those days, just because, you know, yeah, you can be right and have a big winner. Like today, for example, today was CPI, right? CPI came out, S&P shot up, from 8.5 all the way up to 25. So it's a nice big move up. And then it hit the new highs, and then it sold off, not down to the lows of the day, but near the low. Didn't make a new low until later in the session. But I mean, there's the market gives you plenty of opportunities every single day to trade. Don't put yourself in this position where if you're taking a trade based off of the market's reaction to an important number like CPI, non-farm payrolls, you can find yourself stuck, trapped, whatever you want to call it, in a bad position, and you're going to get stopped out. Hopefully, you get stopped out. Otherwise, if you're running, mental stops. Some people like to use mental stops for some reason. It's going to run against you very far, very quickly. So, and again, market gives you plenty of opportunities every day. Just wait till the cash session opens up. 8:30 Chicago time, to really start to get involved. And even once the cash opens, me personally, I like to give it, 4 or 5 minutes for the market to sort of settle down and make its decision on where it wants to go. But the market's going to give you a lot of clues intraday on where it wants to go in the near term. Okay. And, today was a great example. For example, cash opened up, right? And we almost immediately took out the highs that we had made when the CPI came out. Now, at this point, there's not really any strong reason to be looking to get short up here at these new highs. You don't have a divergence. You don't have a bearish ratio coming up here. If anything, you got the bearish value area right here. That's this red value area in the bar. But other than that, there's really not a heck of a whole lot, that's really telling you, hey, you know what? This is a great short opportunity now. And we keep going up, making new highs. Again, even up here at this level around the 33 area up here. Again, there's no strong reason that's saying, hey, you know what, maybe you could get short up here. Finally get up to these new highs up here at about 9 o'clock. Okay, then you start coming off a bit. But notice, right, this high at 9 o'clock, you got the positive delta going into the highs, but then look what happens for basically the next, almost 10 minutes after that. From this is 9:03 all the way up to 9:15. It's mostly negative delta. You've got one bar here with positive delta of 591. You got one bar here with delta of 0. Okay, 0. I mean, it could have been +1. I don't sit here and go, oh my gosh, it's on 0. That must mean something. No, this is a minute-based chart, and it's just coincidence that it closed, right on the minute at 0. It could have been -3 or +2 or something like that. But anyway, it's kind of weak. But overall, from you hit that high up here, it's all negative delta for the most part, except this one bar. The high that you hit earlier here, yeah, you've got some negative delta building over 3 minutes. It's actually getting a little stronger. 155 minus 406 minus 730. Then it comes right back with, again, strong positive delta. Now, this is, sort of a increasing delta, right, which normally is bearish. But again, then the next bar goes inside of the last candle, right? That's not a good sign. Anytime you go inside of a bar you're looking to get long or short of, and it goes inside, that's not a good sign, right? Market hasn't made up its mind yet if it's really going to go. If this if this bar here at 845 started trading below the low of the bar at 844, I'd be a little bit more interested in getting short. But the fact that it's just sort of hanging around inside is not a good sign. Okay, and then the market went up. You got these three bars here: positive delta, a negative, and a negative delta. Okay, that's just two bars with negative delta. You got a bar here with negative delta, but once you hit this new high up here, now you're starting to see the aggressive sellers coming in, right, and being sustained over, over basically a 10-minute period. Okay, then you're starting to see some bearish things as well in the order flow. Okay, what bearish things are you seeing? Well, you got the bearish prominent point of control up here. You got the bearish value area, right? That's not being tested until about 4 minutes later. Another bearish value area. You are starting to get, sort of alternating positive and negative delta bars coming in here. Then you get this big bar down here, okay? Sort of matches this big green bar up. This one you got strong negative delta, which again, the previous bar you just had positive delta of 600. The fact that it's starting to, the bar itself is starting to elongate, is a nice sign. This bar here, again, is similar on the bullish side, but it had very small delta. It's just zero. Here it's very strong directional delta. But what's more interesting in this bar, let me just expand it up here for you a little bit. What do you see in this bar? All right, you're starting to see some kind of thin prints in here. Is at this level of 39 3/4, one contract trade. So this market is moving pretty quick in a direction. In this case, the direction is down. Point of control is near the bottom. Next bar, you got a bearish prominent point of control. You got the value area as well that's being abandoned. It's not being tested in the next couple of bars. Sells off a little bit, comes right back up, and the same thing you're starting to see in here. Bearish prominent point of control, another bearish prominent point of control, right? You do have a bullish prominent point of control here at this swing low, and it rallies up to a kind of a swing high up here at 45.40. Okay, then it's just sort of going sideways. But again, look at this from this high. Overall, what is the delta telling you? It's mostly negative, okay? And even if you're looking at, say, the cumulative delta, right? This is the high bar right over here. Cumulative delta here was 24,000. Now we're all the way here. That was what, 904, 903, 904, 933, 33 minutes later. Cumulative delta is at 17,000. So it's dropped, about 7,000, 6,500 contracts in terms of cumulative delta. So cumulative delta is going down. We're at the high of the day, right? If you're at the high of the day, three things are going to happen, right? One, you're going to keep going higher. Two, you're going to reverse and sell off. Or three, you're sort of going to go sideways, right? But now, as we are basically going sideways, we do have a lot of aggressive selling coming in, right? And even just looking at each individual bar, it's mostly negative deltas. You do have some positive deltas mixed in here, but overall, it's negative delta, okay? And then we started to work our way out. Remember what I was talking about, the lack of volume here, the one contract that traded. Okay, then you get to this bar over here, bearish value area, right? That's why it's darker red. Okay, but more importantly, in this bar, you're starting to see that lack of volume also take place. The one contract here, okay? 54 against 1. So what's that telling me, right? I mean, I know a lot of, order flow gurus out there always talk about seeing where there's big volume and trading around that big volume. Well, you also have to look at the areas where there's lack of volume, because lack of volume shows lack of participation, or sort of the result of lack of participation is a market that's moving quickly. Traders haven't had a chance to react to the market as the market's moving. So this is, you talk about the term footprint, right? This is the footprint of a market that's moving quickly, okay? Now, let me just scroll this over. So, I'm starting to see signs here with this 1, right? And then this bar comes in, you got a 4, you got a 0 in here, right? So at this point, I know that the market is already starting to be heavy towards the sellers, right? Because the delta is obviously, most bars are strong negative delta, right? Even here, you got minus 900, here minus 1900. I'm starting to see the momentum come in here. The value area is bearish. You got this gap in value here as well. This bar's got 1, 2, 3, 4, 5 selling imbalances in it as well. So obviously, I'm not looking for or expecting this market to start trading higher. If anything, I'm looking for it to start trading lower, right? And you can see once it sort of hit that tipping point in here where the big crush of sellers came in, because this delta is minus 1900. Okay, prior to that, the biggest negative delta was, you know, minus 1600 here. This is coming in as we're breaking out of, you know, again, this swing low here. Here we had broken out, excuse me, but then we just sort of went sideways. Now we got a little bit more of a clean break here with the longer bars. And then that was it. The rug just got pulled out of this market, and we immediately sold off, you know, from this 29-ish area, you know, like 29 to 30, all the way down, quickly down, you know, below 19. That's 10 points. Even got down here to what the low was, 45.14. Obviously, we sold off. We're right now, we're back up to 4,500, but we got as low as 73.5 during the session. So again, you know, sort of to recap, you know, on days where you know there's going to be volatility in the market as a result of a big number like CPI, which was today, non-farm payrolls last week. No one's putting a gun to your head, so you have to trade that number. Let the market settle down and then start trading, because you're going to have plenty of opportunities during the trading day where things are very clear. Okay, I mean, like, I won't say crystal clear, but, you know, clear enough that you can make a pretty good trade, right? Because even if you're trading up in here, right, just noticing that you went from this bar here to 10 minutes later, you know, basically all negative delta, you could already be thinking this high is going to be holding, and you're going to be looking for some signs in the order flow to get short off of, right? I mean, not every high is going to be taken out and made new highs. You also got to be looking for those potential reversals. And it's not just about trading around the big volumes. You also got to be looking for those areas of lack of volume. So lack of volume means lack of participation. Just really quickly, you know, for example, platinum, right? Because there's a trader yesterday who was asking me about platinum in the weekly training, and there was a big volume that went through here, 194. There's a big order, about 250 contracts got bought up from basically, you know, 907.5 all the way up to, you know, almost 909.5. You can see here the 194. That's what was left over. Basically, this order came in and swept everything. And, you know, if you're a dome trader or a heat map trader, you say, oh my gosh, there's a big volume here, I got to buy and get long. Well, the market sold off a little bit. It retraced that whole move down before it went up and made new highs. Okay, so just because you have big volume, right? I know a lot of people see big order coming into the market. They like to jump in front. Well, sometimes it works, sometimes it doesn't. This was just a big order going through the market, right? I mean, obviously maybe people were bullish, but nevertheless, I mean, the market did go up. But if you're buying it here, right, and you're a dome trader, you know, you're not using wide stops, you know, a $2 stop here, right? You're using, you know, a 50-cent stop, you know, 5 ticks or something. I mean, eventually the market did reverse and go back up, but don't just get lured into thinking that, you know, order flow is just about looking at big numbers. You also got to, you know, in more liquid markets like E-minis, you got to be paying attention to where there's lack of heavy volume, right? Because that is also important. All right, anyone. Sorry. All right, anyone. Sorry. I'm going to end that video here for today. You know, it's been a while. I'm a little bit out of practice of doing these, you know, daily live recordings for you, but I'm hoping to start getting back on my schedule and get them out for you. You know, if you haven't had a chance yet, be sure to check out my other video on the Orderflows Trader for Go charting. All right, it's a new platform. It's a web-based platform as opposed to, you know, if you're using the Ninja Trader platform, you're sort of tied down to your desk, and you know, it just gives you another way to follow the market. On, you know, I use a Samsung Fold phone, so the screen is, you know, a bit bigger, but you know, it gives you another way to watch the market when you're on the move. So, all right, everyone, thanks, and I'll see you guys on the next video. Bye bye.